this section of our CD with our Forex Conquered book. In this exercise, I'd like to demonstrate how we can implement the pivot point calculator from a longer term perspective, especially by filtering out certain numbers. Obviously, if we have, as you can see here with our pivot point calculator, we have R3, R1, R2, midpoint or pivot point, the S1, S2, S3. Here's how we can effectively use this to helping uncover our pivot support and resistance numbers. On our right hand of our screen here, we see the Japanese yen, the dollar yen, and the green line, this first green line that you see here is a weekly number. The second is a monthly number. Now, obviously, the blue would be a daily number, and it's moving almost on a daily basis. So the software that I use with Genesis allows me to automatically calibrate these numbers, and it filters out which numbers are more effective. In other words, if S1 or S2 or S3 is not relevant, it will filter out one of those numbers. So to help and to show you and illustrate how you can do this manually, let's take a look at how to utilize a pivot point calculator. First, we take the highest high of the time session. We're going to be looking at a monthly number. As you can see, this dashed line here is beginning of the month. So as we can see, we're taking a look at our beginning of the month, 11-9, 11-8, 11-6, 11-3. We'll go back all the way over here until we can get the first of the month of November. Here's October. So the highest point on our chart would be right here at 118.59. So let's put that in our pivot calculator, 118.59. Now scrolling over, let's try to identify during the month our lowest point. And as you can see here, 11:27, 11:28, 11:29, and again 11:30. And the low on 11:30 is 115.49. We have 115.37. So 115.37 is the low for the month of November. So let's put in for our low 115.37. 115.37. Now look where the market closed. The market closes at 115.79 for the month. That's going to be our close. 5.79. Okay. Now your calculator that accompanies this book is the same format. Just hit the submit button. We give our 3 resistance. We give our 3 support targets. So for the month, it's really giving us an idea that if the market closed here, our first target of support will be probably somewhere down around 114.57, and that's an area that I would say we want to heighten our attention to. So the beginning of the month, this is the first day of the month. Notice that our low is 114.96. Now the next time frame that we have to deal with is our blue line, which is our daily, and then this other green line, as you see, moves a little bit later and more frequently. That is the weekly number. So we're going to do the same concept with the weekly. Now remember, in the book we talked about a setup, or we talked about a situation where we get a confluence of pivot supports or a confluence of pivot resistance. And this is a great example here. If you just calibrate and calculate your daily numbers, your weekly numbers, and then see manually if all 3 numbers kind of coincide near or at the same level, that'll give you an idea that that is a high probability support zone. Now let's keep in mind, I mean, quite frankly, the market went from 118.59 way up here in just a very short period of time, and if it falls down here, we're probably A, oversold, B, the market, as it's coming into 3 different time frames, monthly, weekly, and daily, it's entering a confluence support zone level, so we probably want to heighten our attention to that level. So for short-term or intermediate-term traders, we definitely want to say, you know, if this market gets down to this area, and if we have a secondary or at least a confirming buy signal, that's worthy of looking at buying. Now, our candle patterns is one opportunity. We see a potential hammer formation occurring, And notice that we have our weekly number lining up, our monthly number lining up, and our daily number lining up, all at around this 114.5 area. Now notice what we have. This is the first time that we really see the market with long shadows holding the support. We saw that over here, but this is really, truthfully, the first time that we have that kind of a tightening of the band of these three time periods lining up pivot numbers right almost on top of each other. That will give you a strong clue or a good indication that we might be at a bottom and thus presenting a major buying opportunity. Now we have a doji. A doji forming at or near pivot support or resistance is a good reversal clue. So I think that right now what we would want to do, that we've identified that the market stalled, it's stopped, it's supported right at that confluence of support. Now we probably want to use our multiple time frame techniques and then take it from a daily chart to possibly a 60-minute chart and see what is the internal or the shorter time frame look like. Who knows, if we look as if we have a nice buy signal with another candle pattern, a high close doji, a hammer formation, we might have a great way of determining a small risk and a potentially large profit opportunity. Now here's where we can take our pivot points and then apply our Fibonacci calculator. And if you take your Fibonacci ruler, and you can determine that, you know, from the high to the low, if you went long in this area, you know that you have a small risk factor, which is now at or the established low, correct? And we can now make a determination whether we want to go long, expecting possibly the market to come near the 50% correction or the 618 retracement level. So this would be a nice setup in here. Using our pivot point formula, looking at our monthly, our longer term calculation, it coincided with our shorter term, which is the weekly, and it's specifically targeted and it held the daily numbers as well. So combining pivots and Fibonacci are two great tools which will help you. And again, here we have an amazing move in the market, and it was really the pivot points that helped identify this bottoming process. Again, now the market's really just getting obnoxiously strong. And it's really this monthly, weekly, and daily confluence, the high close doji trigger right in here, which really accentuated that buy signal. So I think for you in your trading endeavors, using this book, the material presented in this manual, also the pivot point calculator, how hard is it really that if you don't have a charting software system that can calibrate this automatically, go to your CD, input the values, then go to a chart, and really all you need to do is you can just say, okay, here we have S1 at 114.57, and you can actually just draw in your own support levels. And so therefore it's a great exercise as well to get you in the habit of paying attention to those numbers, because you're forced to do your homework. Using pivots and in conjunction with Fibonacci is just an excellent tool for you to understand the relationship of price in a given time frame. Remember, with pivot points, the monthly numbers work from, in this example, from November's trading action was applicable for December's monthly time period. And so when you're looking at the monthly numbers for November, they're good for the next following month. So that's why we call it one of the best predictive time or at least predictive tools, because it deals with a specific time frame and it deals with specific plots of interest or points of interest, namely the high, the low, the close of that given time frame.